Welcome to Clatch Radio. This audio and video were created for academic, entertainment, and comedic intent only. Nothing presented should be construed as investment advice or recommendation to buy or sell any security. Welcome to Clatch News, concise by design, allergic to excess. So today we're looking at a true giant of American industry, 3M Company. You know, the people who make everything from the tape on your desk to the adhesives literally holding your car together. It's a massive, complex machine.
It really is. And right now, Wall Street is having a tough time figuring that machine out.
Yeah.
We're zeroing in on a recent report from JP Morgan, where they actually downgraded 3M to neutral.
Neutral, okay.
With a $182 price target, and this is right after their Q4 2025 earnings. So, I mean, they're basically telling investors to, pump the brakes a little.
That's interesting, though, because on paper, 3M is in the middle of this huge makeover. They call it a back-to-basics strategy, right?
Yeah.
They've got the new CEO, Bill Brown, and they just spun off their entire healthcare business, Solventum. It feels like they're trying to slim down and get in shape.
And that's exactly the setup. The core narrative here, it hinges entirely on margin expansion and operational rigor. Back to basics sounds like a bit of corporate speak, but for 3M, it really means fixing the plumbing.
Right.
They are laser focused on metrics like on time, in full delivery, and just aggressively cutting costs.
It sounds kind of boring, but for a company that was, trying to be everything to everyone, boring might be exactly what they need. So
Yeah.
Is it working? What's the scorecard look like?
Well, on the favorable side, the execution is actually pretty impressive. Their adjusted operating margins expanded by 200 basis points in 2025.
Okay, let's pause right there. 200 basis points. In the tech world, that might be a rounding error. But in heavy manufacturing, that is huge.
It's massive.
That tells me Bill Brown's cost cutting isn't just some memo from the C-suite. It's actually changing behavior on the factory floor. They're squeezing way more profit out of every dollar of sales.
Exactly. And that kind of efficiency makes the valuation look, well, attractive. 3M is trading at roughly 17 times forward earnings.
Which, in plain English, means the stock is kind of on sale compared to its peers, like Honeywell or Danaher.
Yeah.
You're paying less for a dollar of 3M's earnings than you would for their competitors.
Right. And you're not just buying a legacy Tate company. They have strong exposure to these secular trends, the long-term shifts in the economy.
Okay.
Think of 3M as a picks and shovels supplier. They provide essential materials for semiconductor manufacturing, so supporting AI chips,
Yep.
and for the electric vehicle market.
So they're not making the AI chatbot, but they're making the high-tech glue that keeps the AI chip from overheating. I like that positioning. But we have to pivot. You can't talk about 3M without addressing the elephant in the room.
Why?
Or I guess the 15,000 elephants.
The lawsuits, that is the dark cloud on the other side of the ledger. I mean,
Yeah.
prevailing expectations assume a successful exit from Forever Chemical or PFAS manufacturing without more catastrophic legal liabilities. But over 15,000 personal injury lawsuits are still pending.
That is just a staggering number. Even with the big settlements, that's a massive overhang on the stock. And it's not just the courts, it's the customers too, right?
Correct. Analysts are definitely flagging weakness in the consumer segment. We're talking about Post-it notes, Scotch tape.
The stuff we all know.
Yeah, and sales are down 1.2%.
Which makes total sense if you look at the economy. I mean, we all see it. People just aren't buying name brand office supplies when the generics are half the price. That 1.2% drop is basically the sound of consumers tightening their belts.
It's a valid concern. And on top of all that, you have geopolitical risk. We saw that recent volatility around President Trump's threatened tariffs over the whole Greenland crisis.
Right, I remember that headline. But connect the dots for us. Why does a spat over Greenland matter to 3M's bottom line?
Because it posed a potential $40 million direct hit to their earnings. If you're importing raw materials or exporting goods through those channels, that $40 million hit can effectively wipe out a huge chunk of those operational wins we were just praising. It just shows how fragile that back-to-basics recovery can be.
So you have a company that is operationally getting leaner and meaner. It's trading at a discount, but it's being weighed down by this legal history and a really fickle consumer.
That's the friction. It's a battle between the improved business fundamentals and the fear of what's lingering in the background. But, regarding their exit from manufacturing those PFAS forever chemicals, they are officially done.
So what you're saying is, regarding their relationship with Forever Chemicals,
I think I know where you're going with this.
3M has officially entered their "we are never ever getting back together" era.
That's the lens, not prediction perspective.
Yeah.
This has been Clatch News, efficient, skeptical, and done with purpose.
Thank you for listening to Clatch Radio.